Good morning, everyone. You may have noticed that Leeds United have appointed a new manager. Spoiler alert, I didn't get the gig. So this is the currency transfer morning market update for Wednesday the 7th. The main headlines are that the MPC meeting tomorrow continues with residual hope over wage inflation growth. Risk aversion and a flight to safety continues to drive the dollar rally, and the pound currently is largely in reactionary territory. Tomorrow we have the MPC meeting and the quarterly inflation report released from the Bank of England. Expectation is that the press conference afterwards will see Governor Mark Carney striking a fairly upbeat assessment of the UK economy. The market seems to be clinging on to the idea that we may see a rate hike as early as May. And they'll very much be looking for clues of this from Mark Carney's press conference. The justification of the November rate hike was tenuous at best, and to be fair, with what has turned into an economic slowdown in the UK, it is looking increasingly unlikely that a rate hike in May will come through. Sterling continues to react to the global equity market falls and to the dollar drive. And the dollar rally continues as equity markets bounce. Dollar buying at times of stress and market uncertainty is nothing new. It's the typical flight to safety. And you may remember that sterling broke through an important support level on Friday at 140. This fall accelerated down to 138.50 yesterday against the strengthening dollar, but it actually came back off the lows to close close to 139. We'll put all the details in the comments below. The dollar index equally had a fairly choppy day. It bounced back up toward 90, close to the levels before Mnuchin made his weak dollar comments at Davos and threw everything into disarray. And yesterday everything seemed to balance out quite nicely, as it should. You know, the equity markets suffered an early sell-off, but when they were back trading in the green again, so we also saw the strong bids for dollar buying disappear. Consequently, the dollar index gave back a little bit of ground and closed down closer to 89 once again. Finally, a point of note, you may have noticed that our dear President Donald Trump has been rather quiet of late. He was the guy who was very quick to put his hand up and lay claim almost to the 85 new record highs in the stock market since his election. Since the crash, or since the sell-off, he's not made any comments relating to the subject. Shame on you, Donald Trump. Shame on you. We'll keep you posted with anything important throughout the day. In the meantime, wish you a fantastic Wednesday. I'll see you tomorrow.